Hello and welcome to your weekly GoNoGo show. It is August 30th, 2024. It's back to school time at GoNoGo Charts. My name is Tyler Wood. I'm a CMT charter holder, and joining me as always is the illustrious Chief of Charts, Alex Cole. How you doing, my friend?
I am doing very well, thank you.
Yeah. Everybody in your household ready to get back to school or what?
Nope.
I'll tell you what is getting back to work are the markets. And as we do every time we record one of these shows, we're going to take a top level view across the asset classes first, get an understanding of the trends at a high level, and then we're going to drill in deeper and deeper. So let's dive right into this cross asset heat map using some GoNoGo trend.
Absolutely. So you know that we have rallied hard since we hit those lows earlier in August. But if you look at the chart on a price perspective, which we're going to do later, we're still struggling with prior highs. But when you break it down just into looking at the trend and the movement of those colors with the panels that we have here, you can see that equities in that top panel are indeed in a strong go trend. So we had some weaker go bars and now some stronger go bars as well. Treasury bond prices are painting go bars as well, albeit the weaker color, the aqua color. And then if we look at the bottom two panels, the US commodity index painting strong purple bars again, and the dollar, of course, which has struggled a lot over the last couple of weeks, still painting no-go bars, but a couple of weaker ones as we come into the end of the week.
You know, I think it was Gina Martin Adams who is pointing out on social media the importance of oil and the US dollar. A lot of economists looking at inverted yield curves, still a lot of fear in the air about potential slowing of the economy, maybe even dipping into recession. Is the Fed too late in cutting rates? Yada, yada, yada. But I think the important asset correlation when we're talking about intermarket analysis and referencing the great John Murphy's work, noticing that the cost of oil and the strength in the US dollar are both trending lower, albeit not a sharp fall off in either. And we're going to get to those charts in just a minute. That's an important tailwind for risk assets and equities specifically that I think has gone a little unnoticed by a lot of investors. We're not seeing dollar spiking higher in this narrative that people are buying up US dollars. And we're certainly not seeing the cost of oil spiking through the roof either. So Alex, let's take a look at the S&P 500 on a complete GoNoGo chart. We're going to look at both the trend model, which is in that top price panel. If you're new to GoNoGo charts, what we're doing is combining and blending a number of widely used and heavily tested technical indicators, but removing the indicators from the chart. We want to avoid analysis paralysis, simplify our data visualization. And so we've got a composite trend model in the background. And when it is in those aqua and blue colors, we're in a go trend. All probability is on the side of prices moving higher. When we're in purple and pink, it's in a defined no-go trend, or probabilistically heading lower. And those amber bars, of which we had a string 3 weeks ago, really showing the market's uncertainty. That sharp sell-off that we saw in early August, the VIX above 55, I think has largely been attributed to the unwind of carry trades as the Central Bank of Japan surprised everybody with a rate hike. So, Alex, talking about GoNoGo trend for the S&P 500 index, we know we're in a go trend, but talk to us a little bit about what the momentum, volume, and volatility signals are telling us.
Yeah, and like you said, we do know we're in a go trend, but what's great about combining everything into the background and just color coding the chart to show the trend is that we can see clearly important levels on the price chart. And we are struggling with these prior highs quite clearly. We've come racing back up here, but we've been moving sideways now for just over a week. So we are in, the weight of the evidence says that we are in a go trend, and we're going to really want to see new highs. When we turn our eye to the lower panel, that's our momentum oscillator, and you can see that momentum is in positive territory, but it's not overbought. So perhaps there's a little room for enthusiasm if we were to take a crack at these prior highs, but we're in positive territory. But again, volume is relatively light. So with the GoNoGo charts, we also incorporate volume, and you can see that we're showing that lighter aqua color, meaning that relatively we aren't seeing heavy volume at the moment. So there's quite a lot to take away from this chart, but the weight of the evidence suggests in a go trend, and we'll look to see if we can take out these prior highs.
Absolutely. Let's take a look at a few charts under the hood of those major asset classes. Let's start with the TNX, the 10-year Treasury yield. As you spoke about on the last heat map, we're seeing Treasury bond prices rising, which means rates are falling. And what a beautiful sight that is for a lot of us.
Well, you mentioned about oil and the dollar and those in no-goes, which is probably not a bad thing at all for equities, but the same could be said for rates, right? So we're in a clear no-go trend for Treasury bond rates, making a series of lower lows and lower highs. We have sort of come sideways a little bit towards the end of this chart, and this provides a very important moment. We're going to watch to see what happens here at the zero line. So the oscillator riding the zero line now for several bars, causing the grid of the GoNoGo squeeze to rise to its max. So we're going to watch to see in which direction that squeeze is broken. If it breaks back into negative territory, then we'll be able to suggest likely trend continuation to the downside, and we'll look to see if price can go ahead and make a new lower low.
Absolutely. Reporting today, the personal consumption expenditures, PCE, the Fed's favored data point around inflation measures, really sticking in line with expectations. And of course, everybody expects the Fed to cut here at this upcoming September meeting. What we like to do with GoNoGo charts, and I think technical analysts broadly, like to look at what's actually happening rather than have a position or a theory about what will happen. Simply paying attention to what's right in front of us can help us avoid any behavioral biases or missteps in our expectations. And so, as you point out, Alex, it's at a point of inflection where momentum has dried up to that neutral level. We've been stuck at the zero line, showing no directional momentum for where Treasury rates are headed. When we see the break of a volatility squeeze, for those of you who are familiar with Bollinger Bands or Keltner Bands, that's the way that we use this tool. The break of the squeeze, it is directional dependent. So if we break down from here, we'd expect to see rates continue to fall. Breaking positive out of that GoNoGo max squeeze, certainly reason for caution and potentially a higher move in US Treasury rates. Alex, let's move on from the TNX. Let's take a look at the US dollar. We like to use ETF proxies for the dollar index. The UUP is the ticker symbol. That gives us a sense of volume at which this is trading as well. Talk to us about the technical picture here for the US dollar.
Yeah, so another inflection point, really important one, I think, because we just made a lower low, and now we've rallied off those lows, and we'll want to see what happens again down here on the oscillator. We know that if there's a strong trend in place, that zero line should act as an objective level of either support or resistance, depending on the trend that we're in. So in this case, we're in a no-go. We've made lower lows and lower highs. As we rally, and we see this as a relief rally until it isn't, we're going to watch to see what happens at the zero line. If we find resistance here, as we have done now for several tests, we're going to expect price to roll over and threaten these lows here. If we can break back and recapture positive territory, that of course would tell us momentum has changed and perhaps is out of step with the no-go trend. But at the moment, no-go trend, oscillator testing the zero line from below.
Absolutely. Being that it is the end of the month, let's take a look at this on a little larger time frame. Here, close to the close of August and the week, we're going to get a fresh monthly print, a fresh weekly print at the daily close today. If we're looking at US dollar from a little longer term perspective, going back a few years, we have seen dollar strength prevail. But we are still holding that weak form go trend, albeit with a momentum oscillator below zero on heavy volume and struggling to make higher highs over these last several months.
Absolutely.
All right. Moving on from the US dollar, let's take a look at gold. Precious metals for the win, I believe.
Yeah, absolutely. We were talking about these levels here when we were sort of threatening to make new highs. It took a couple of weeks to do it. But once we did it, then we've moved now significantly higher. So this is the weekly chart. You can see that pattern here where we went sideways. And again, as we've been mentioning now several times, when in a trend, you look to the oscillator and the zero line for an objective level that can be used, in this case, as support because we are in a go trend. So what happened as we moved sideways for several weeks, into 2 or 3 months, We were able to continue to find support at zero. That gave us these trend continuation green circles, telling us that we're likely to move higher, and we've indeed gone and set a new higher high. And if we look at this on the daily, you can see that just in a little bit more detail.
If you wouldn't mind, pop back to that weekly for a second. I think the fundamental I guess premise of trend following is that we're looking for a momentum resurgence in the direction of the underlying trend. And when we're looking at the price of gold per ounce, being stuck in that range bound territory through the end of 2023 and into 2024, the momentum signal is highlighted right on the price panel with that green circle icon. As momentum waned, came down, found support at the zero line, and then surged back higher. That's our signal that perhaps buyers have taken control in that tug of war between buyers and sellers of gold, and that momentum signal precedes the price gains. We've now seen 3 of those signals here on this weekly chart, the most recent at the beginning of August, and again climbing higher in the price of gold. So as you're working with your GoNoGo charts and you're thinking about your position sizing, if you're a longer term investor and looking at these weekly charts, those momentum signals are handy to have right on the chart to signal where those breakouts really matter. All right, Alex, let's move on from gold. Let's take a look at US oil. Meandering on the weekly basis.
Yeah, I mean on the daily too. So this is what we're dealing with on oil. We can see it's really been quite range bound for a couple of years. On the daily chart, the weight of the evidence remains a no-go, but you can see that we've struggled to set higher highs or lower lows. So really sort of coiling at the moment on this daily chart. And that's sort of reflected with the oscillator's inability to get very far away from zero. So you can see, trying to get into positive territory, dipping into negative territory, back into positive territory. So certainly a lot of confusion around the oil markets at the moment, but when we just look at the trend, the weight of the evidence still suggests a no-go on the daily.
And Alex, let's pop this to an intraday basis for those futures traders who are watching this. I know you're comfortable with other instruments on Brent or West Texas crude, but if we were to look at a trend model in a range-bound instrument like oil is right now, if you were trading intraday, let's say on a 39-minute bar, or even shorter, you'd be able to capture GoNoGo trends and within a mean reversion symbol, take shorter scalping trades. And I think one of the best parts of technical analysis is the fact that the tools work in the same way across all time frames. Obviously, on this ETF, we've got a choppier chart, probably without quite the same liquidity as the futures markets. But you get the idea of using trend on whatever time frame fits your objective. So if you're not a longer term investor and you are trying to capitalize on some of the volatility in the oil markets, you can use GoNoGo charts on any time frame. All right, Alex, let's move on from oil. Let's take a look back at the S&P 500. Let's look at that on a weekly and a monthly basis as well. Just before we go to our sector rel map. I know coming into the end of the month and looking at weekly charts or even monthly charts, it's the chance to zoom out. And I've had several emails this week from folks who are really troubled, not sure about the direction of the markets, based largely on the insecurity and uncertainty in the financial news cycle. Certainly, there are plenty of things on the horizon for this fall. Geopolitical tensions and the like. But when we just step back and we look at the trend perspective, certainly this volatility that we saw at the beginning of August doesn't even show up on a monthly chart. Perhaps a little longer wick on that last monthly candle. But if we dive into the weekly basis for the S&P 500, we can also see a quick recovery, a V bottom off of those August lows. And the momentum oscillator finding support at zero gave us that trend continuation signal. As you mentioned on the daily chart, Alex, we are at prior highs. So it's going to take a little more drive, a little more demand from the buyers to move us back into all-time high territory. But certainly seasonality-wise, we'll be coming into a happier stretch through the fall.
And I
So
think it's
yeah, go ahead.
important, Tyler, just to note that multi-time frame analysis is so important for everybody in the markets, whatever your perspective is. But if you were if you were using this as your larger time frame bias, knowing that we were in a go trend looking for support at the zero line, you can see those opportunities to re-enter the market on the daily chart appearing as we got trend change back to go trends, or using the sort of components of the go chart on that smaller time frame, given that your larger time frame bias was what it was, and the go trend still in place, and as you said, found support at zero. So you got to keep things in perspective, and I think that's such an important thing to remember.
Absolutely. That's part of why every Saturday you send out the launch conditions chart pack to all of our institutional subscribers, trying to practice what we preach. Step back from your trading desk, take a look at the broad picture on longer term time frames, and get a sense of what's actually happening. All right. So as promised at the beginning of today's show, let's dive a step deeper. We've looked at the asset classes. We've looked at a couple of the intermarket forces at play. Now within the S&P 500, if we're looking at U.S. equities, we want to drill down into the relative strength leadership. And this heat map is showing us the relative ratio chart of each of the sectors of the S&P 500 against that benchmark index. As you'll see, we've had quite a bit of rotation here. As we're coming into the month of August, we saw a rollover in the technology and the discretionary sector, and we've seen an emergence of go trends, relative outperformance from the cyclical sectors as well as the defensive areas of the market. So Alex, walk us just from top to bottom what we're seeing on this heat map.
Yeah, and it's just the beauty of data visualization, Tyler. You know, I'm passionate about that. And I think that sometimes we forget that as technicians, we were the first data visualization experts in the financial markets, putting the prices on the chart and getting a sense of what's happening visually. But we can go further. And I think just highlighting the trend using heat maps like this and forgetting about the price chart completely just allows you to see the rotation that you were speaking about. I mean, not so long ago, it was really just tech that was driving the markets, and you can see all of the no-goes towards the bottom half of the map. And then just from watching, each day watching these maps, you can see that rotation to where we are now, where really the growth sectors are underperforming and struggling. And as you said, it's everything else that is sort of taking us back to at least testing those all-time highs. So just a nice way to visualize the rotation in anything.
Absolutely. So we've got financials and energy in those strong blue go trend colors, relative outperformance of an S&P 500 that is already in a go trend. Also strong blue outperforming go trends from healthcare, consumer staples, utilities, and real estate. So Alex, our next step then is to dive into these sectors and look at the industry groups, again on a relative strength basis, to find out the areas of these sectors that are leading the sector performance. So let's dive into financials, first one of outperformance, and take a look at the industry groups within the financial sector of the S&P 500 that are leading us higher. And I'm seeing 4 that are in go trends on this daily basis, but 2 that are in strong go outperforming trends, correct?
Yeah, absolutely.
So those 2 being specialty finance and financial administration. So when you talk to your clients about the financial sector, they might be thinking only banks. And the truth is there is a wide variety of companies, certainly across the cap scale and in very different segments of the industry. So if we dive in just to the specialty finance sector, let's pull up a couple names that popped out on some of our scans that we used in the stock chart scanning engine. Let's pull out S&P Global, SPGI being the ticker symbol. That's a pretty undeniable trend, Alex.
Yeah, there's not too much to argue with there. I mean, just consecutive strong blue bars with the oscillator finding support or breaking back into positive territory, giving us those signs of trend continuation. This is what we love to see. I mean, I talk about it all the time, but clustering of trend continuation icons, when you get multiple, it usually leads to something, in my view. And you can see here, we entered the go trend. We struggled. We pulled back, as often happens, right? We've sort of found some support. We retest the zero line. And then when we break out of that max squeeze, we come right back down and we get another another move into positive territory. So that gives us these two trend continuation icons back here on the chart, leading to a big rally. And then, of course, for whatever reason, investors digesting gains or momentum waning for whatever reason, we see price move mostly sideways. And then again, clustering of Go trend continuation icons preceding the new move to higher highs. So just nice to see things play out.
And just a note on the tools, those red arrows are using the momentum oscillator in its traditional sense, right? So if you're familiar with RSI or any other momentum oscillator, when you reach a level of overbought and then momentum cools, that's in a traditional sense an opportunity to capitalize on the exhaustion of a trend. And that's what we're signaling there with those red icons. Not a sell signal, but that the trend may be exhausted, maybe struggle to go higher in the short term after that. Interesting to see this chart of S&P Global never leaving the go trend conditions despite a VIX above 55 and a rapid market sell-off in early August. Held trend conditions with a short blip below zero on the momentum oscillator before returning to trend. All right, let's take a look at one other one. Moody's, MCO being the ticker symbol.
Yeah, it's very similar. I mean, like you said, it is amazing how they held on to their trend throughout that period. You saw the volatility, though, in the size of the trading ranges. But in this case, we didn't even get back. We didn't even threaten negative territory, finding support each time at the zero level before now racing to new highs. So we are seeing some counter trend correction icons. That's those red triangles that you see here, where we're just saying that we've been overbought and we keep cooling off a little bit. So, but interestingly, right back to overbought again. So there's a lot of enthusiasm here. And of course, we know as well as maybe others that strong momentum is not a sell signal, as you said. Yes, if it comes back to neutral territory, maybe there'll be some short-term cooling of momentum. But you also know that the stronger the trend, the more likely we are to blow past those overbought readings as well.
Absolutely. And Alex, if we just take a look at Moody's relative to the financial sector, the reason for our ratio charts, the reason to do relative strength work is if you're trying to beat an index, as every portfolio manager is trying to do, beat their benchmark, it's finding the securities that are outperforming your benchmark. And so we take that top-down approach, looking for the sectors that are leading the index, and then we look at the industry groups that are leading those sectors. Here we can see Moody's handily outperforming the greater financials sector over the last several months, all through the summer, pulling back slightly right now, and a little dip below zero on the momentum oscillator. If we wanted to, let's take a look at S&P Global against the XLF as well. This is all part of the weights and measures, getting the full perspective on what securities are best to put into your portfolio construction. And there's S&P Global, similar inflection point there, perhaps even a little more weakness for S&P than there was for Moody's.
I think the interesting thing here is that that's really the financial sector catching up almost, right? So we've seen that sort of cooling off relatively, but now we've got the broader outperformance in XLF that we see on the sector chart as well.
Absolutely. Let's take a look at another industry group within the XLF, the financial administration. This was a new one to me, Bread Financial Holdings, BFH.
Yeah. Always reminds me of that classic 80s British group, Bread.
I'm sorry, Alex, for the children at home, who?
Yeah, don't worry. Let's move on. So anyway.
We're suddenly dating ourselves. All right, let's talk about Bread, not the 80s band.
Yeah, so another strong trend, much deeper correction. We actually saw some Go fish bars here when we saw the market uncertain of the health of the Go trend, but we recovered to paint Go bars fairly quickly in the oscillator, then a few bars later getting back into positive territory. So that Go trend continuation icon here really telling us that all was okay again. And then we saw that sort of run up to new highs that you see here. And again, now we are overbought coming back. So we see the counter trend correction icon.
Fantastic. And let's take a look at FIS, Fidelity Information Services.
Yep. I think that we took a look at this one earlier, and what I was looking at was just the sort of break above this slightly downward sloping trend line. So this was sort of a nice break. We saw it then confirmed with heavy volume, and then we're now racing away to higher highs. Already 2 higher highs since that break, but in a go trend, momentum in positive territory, almost overbought. So we'll keep an eye on it going forward.
Fantastic. Last one from within the financial sector, Fiserv, FI is the ticker symbol.
Yeah, this one really moved. You can see that just sort of flying up, not a straight line, but certainly getting close to it in this last portion of the chart. So strong go trend. We blew right past this counter trend correction icon. Well, I guess we moved sideways for a few days and then on to new highs. So looks strong for Fiserv.
Absolutely. All right, let's switch our lens for a minute. Let's just talk about the energy sector. The XLE was the other strong outperforming sector group this week against the S&P 500. If we look at the industry groups within the XLE, doing that same relative ratio work, the only industry group within energy that is leading that sector higher is going to be pipelines. And so within the pipeline space, you've got a lot of opportunities, but let's just take a look at a couple. OKE is the ticker symbol for ONIOC. Energy pipelines.
Yeah, I mean, a bit of a sort of a flirtation with a no-go trend here a couple of weeks ago, but really quickly came back and now screaming high. Big blue bars at highs here with positive momentum confirming.
Absolutely. And let's take a look at one more. TC Energy Corporation, TRP.
Yeah, there's lots of good charts today. I mean, look at this. This last couple of months have been really strong. I mean, almost no pullbacks. We get 1 week aqua bar here and a couple here, but really the go trend since it sort of started back in May, really finding support primarily at the zero line. This is interesting though, because mostly sideways price action, and look at the squeeze building. We've had several squeezes, quick return to positive territory, and you can see that break then happening fairly quickly. And what we like to see or talk about is that, color change or important moments on the GoNoGo chart tend to line up with important levels on the price chart. So really finally trying to get above the highs here, finally make new highs happening as we break out of a max GoNoGo squeeze. We just see the trend continuation icon. We get the strong blue bars, right in here, very strong signal that we're going to move higher.
Absolutely. That build up, what do they call that in physics? Kinetic energy? Let me not expose myself as a physics fraud. But the idea that pressure coils in the system and that tug of war between buyers and sellers once resolved.
Stick to the toothpaste.
Exactly. Squeezing the tube of toothpaste until the cap pops off. Alex, fantastic review of a lot of good looking charts, a lot of healthy rotation in the markets as the S&P 500 comes back to attack those prior highs. I hope all of our viewers noticed today we're not talking about NVIDIA. If the only charts you're looking at are the ones that are getting the most exposure on financial news media, you could be missing out on some great trending opportunities. Alex, looking forward as always to an exciting fall with you and weekly here on the GoNoGo show. If you're watching this on YouTube, make sure you like and subscribe and whatever the kids tell you to do, share it with your friends and colleagues. And we look forward to seeing you every week through the fall. Until next time, take care of each other and trade them well.